Chapter 3. Build a positive portfolio. If you are called to testify in court, you cannot sit there in silence with a neutral look on your face. You must provide information by answering the questions. If you want to finance a car, you cannot present a blank credit report and expect to get the best financing because there are no negatives showing. You might get an ignition key, but you'll be paying a lot more for your ride than someone who has a record of paying credit on time. If your credit report is too poor or too thin, then they may ask you to get a cosigner. That's not what you want. I always advise people with good credit, including parents, not to cosign for an auto loan because it jeopardizes their own finances, credit rating, and debt ratio, among other things. Poor credit versus thin credit. A poor credit file is one with too many late payments or too recent late payments, and possibly other negative events. A thin credit file is one with fewer than 3 trade lines. If you have one credit card and have never used any other type of credit in your life, then your portfolio is extremely thin, and you need to remedy that now. It takes 6 months for a newly opened revolving account to count on your credit score, so don't procrastinate. Putting off work also means putting off your goals. Do the task now and realize your dreams sooner. A thin file is one with fewer than 3 accounts. However, you can get an FHA loan to buy a home with only 2 accounts, though it is not ideal. Experian calls a credit file thin if it has fewer than 5 accounts. They say it is more difficult for them to get an accurate score without the data from at least 5 trade lines. A trade line is any type of account that shows on a credit report, credit card, auto loan, student loan, private loan, mortgage, etc. To count toward the credit score, an account must be open for at least 6 months. A paid-off account, such as an automobile loan that's paid and closed, may remain on your account for 10 years. Even though it's closed, it still counts toward your credit score. With all positive trade lines, you want them to remain on your report forever. How many accounts do you need? You want to have at least 2 major accounts on your credit report. Major accounts are, in order of greatest to least, a mortgage, an installment loan, or a major credit card. An installment loan is one with a set monthly payment and fixed end date, such as a student loan or automobile loan. A major credit card is one you can use at any type of establishment, such as Visa, MasterCard, Discover, and American Express. Individual establishment cards such as Home Depot, Macy's, and Chevron are not major credit cards. If you have 2 major accounts and 1 store or gas card, that is sufficient to achieve a top-tier score. The ideal mix of credit is to have a mortgage and/or installment loan plus a couple of major credit cards with possibly a store card added to the mix. I share this here with a certain amount of trepidation, because in a book about repairing bad credit, my fear is that you might accidentally interpret this to mean you should go out and open a bunch of credit and then charge up merchandise, beyond what you can reasonably and conservatively afford, as an excuse to build credit. Don't do that. You must not use building credit as an excuse to go spend money. It doesn't work that way. You don't create a solid financial profile by overspending or by purchasing a vehicle when the transportation you have now works. Building a positive portfolio is not a license for overspending your budget. If, after getting erroneous negative accounts deleted, you will have a too thin credit report, then open 2 major credit cards as soon as possible. Today is not too soon. It will take 6 months of usage for the accounts to count toward your credit score. Sources for credit-challenged people. A secured credit card does not rely on your credit history. It relies on a deposit you make to secure your credit usage. For example, if your bank offers you a secured credit card with a $500 balance, you will need to deposit $500 cash into the bank. After the agreed-upon time of making all your payments on time, the card can be switched to a regular card with the limit raised. This is a good option if you can't qualify for a regular card. Make sure you keep the balance low at all times and pay the bill in full each month. You can go to your local bank to apply for a secured card. There is also the Capital One Quicksilver Secured Cash Rewards Card and the Discover It Secured Credit Card. The Capital One Platinum Secured Credit Card requires a deposit of only $49 with a limit of $200 and no annual fee. This is a good card if you keep your balance below $50 at all times and avoid the obscenely high interest rate by paying it off every month so you don't pay a penny in interest. A starter card is one that doesn't require a deposit, but some have a high annual fee, so look out for that. They can also have a high interest rate, but if you use the card the way you're supposed to and pay the entire balance each month, you will never pay a penny in interest. The Chime Credit Builder Visa card has no annual fee, but they do require you to open a Chime checking account. I am not a fan of the self-credit card. I don't recommend it because a person can end up paying interest on both a credit card and self-builder loan at the same time, which I think is a big gotcha. There are other options available. This is a short list to get you started if you need to add a positive trade line to your credit profile. How to create the highest score. To achieve the highest possible score in the shortest amount of time, you need to adhere to all, not some, of these smart practices. If they seem difficult, do it anyway and remember that you are now building new, good habits, and that achieving your financial goal is worth it. With time, a difficult habit becomes routine, then easy. Think of it like working out. It's good for your body even though it's hard, but with practice, it becomes easier and even fun. Keep your eyes on the prize, not on the struggle. You can do this. You are worth the effort. 1. Keep your balance ultra low at all times by not charging more than 29% of the allowed limit. That is $29 for every $100. If your limit is $300, then never let the balance go above $87. If you keep it even lower, that is even better. Charge $5 in a month and pay it off when the bill arrives. In an interview with a representative at a credit reporting agency, the question was posed, what is the best balance to have for the highest score? The answer might surprise you. It was 0. In other words, the less you borrow, the better. But don't take that the wrong way either. If you never use the credit card, you will never prove that you use credit responsibly, so that 0 cannot be taken literally. It just means ultra low. 2. Pay the entire balance in full when the bill comes due. You will have points docked if you pay the minimum or pay any amount that carries part of the balance over to the next month. It is a falsehood that you should carry the balance to show you can use credit. No. Carrying a balance communicates that you overspent for your budget and are not using credit wisely. Think about it, why would they penalize you for paying what you owe? Why would they penalize you for being smart and not wasting your money on interest charges? The people with 800 credit scores always pay their balances in full each month. The people with subpar credit pay the minimum. 3. Use a newly opened major credit card each month for the first year. After that, you can use it less often. One usage per 6 months should keep it active and working for you. For people who have long-established credit, they can use it less often. 4. Use each of your credit cards periodically to prevent them from being shut down. If you don't use a line of credit for a long time, the lender will cancel your account without giving you any notice whatsoever. Why? Because if they don't make any money from merchant fees or an annual fee, then it's a detriment for them to maintain the open account. Even though the Credit Card Act of 2009 requires them to give you 45 days notice of any changes, the courts of law have ruled that closure for inactivity does not apply. Consequently, if they cancel your account, your score might drop for 2 reasons. First, the total amount of credit you have available has been reduced, and second, your length of time for using credit may have been reduced. How long is a long time? That varies by company. For major credit cards, 12 to 24 months is common. For store cards, it's usually longer. It's easy to forget about a card you don't use, and then when you receive that rude cancellation letter in the mail, it's too late if they're informing you it's been done. If they're nice enough to send you a warning letter, don't be like the people who think it's too boring to read and disregard the notice. You'll want to use the card immediately to maintain the benefits. Here's a tip if you're trying to establish credit card utilization. Set up autopay using one of your major credit cards for a utility bill or for your monthly tithe or charity sponsorship. 5. Use more than one credit card. Putting all your purchases on your favorite rewards card and ignoring all others is a mistake if you're trying to build a high credit score. You want to show you can handle using multiple accounts, and especially, don't violate tip number 1 above. I had a mortgage client, age 50 with long-standing credit, who had a low score due to his using only one of his credit cards. All his other credit accounts set at $0 for several years. He was never late, but his score was sadly too low to qualify for the best mortgage rate. A tip for homeowners: try to avoid taking out a home equity line of credit, HELOC, shortly before you apply for other financing, because a new HELOC lowers your credit score, temporarily. Keep your eyes on the prize, not on the struggle. Coming up next, everyone, good or bad credit, should take heed to what's coming up next, so you might want to pass on this information to your loved ones, especially the elderly and minor children.